We'll start with him tonight. I've got no Ash at this point. I'm not sure if he's having Easter Sunday off or whether he's going to join us a little bit later on. But we'll start with Julian. I think Ainsley will be in. We'll have Jeff have a look. I'll have a few words myself. Plenty going on in the world. Let me just have a bit of a look and see what. So, Julian.
Paul, hi, how are you?
Mate, I am good. How are you?
Yeah, good, thanks. And happy Easter to everybody, wherever you are in the world. It's a very nice Easter Sunday here. We've been enjoying the marvellous weather that wasn't predicted for Auckland this weekend. And it's been a fantastic Easter for us, although lockdown is a very strange thing. Thursday seemed to become Friday, seemed to become Saturday. So we are going to cure this thing sooner or later and be out the other side. But at the moment, it does seem like every day when you're working from home and under lockdown is a bit of a strange place. But thankfully, the restrictions are such that we've been able to enjoy our gardens a little bit. And it's been in this weather, it's been awesome. So I've been enjoying the time. I hope everybody else has had the chance to have a bit of time off if you're in lockdown or not around the world. So guys, just looking at the markets for the last few days, we probably talked at length last weekend, I believe, around the opportunities that were coming up in both gold and in the stock markets. So both of those seasonal trades happened. Gold especially was a real winner. I think in the broadcast group, we made some in the region of $50 or $60. I think I'm going for $50 roughly out of the gold trade. Tremendous profit. I think that's 19 out of 20 years for that particular seasonal pattern. So that's worked really well. And similarly, the Easter trade as well too in the stock markets. That's also was successful again this time. So now we're only as good as our next trade as a trader. So we're looking ahead, and I think the look ahead in some of the foreign exchange markets and also some of the asset markets is quite interesting from here. Things are a little bit more muddy than they were. We're a little bit more elevated than we were. We have a much bigger Fed balance sheet than we did. And I think probably my overall conclusion at the moment for the next couple of weeks going forward is probably asset markets are going to do all right. So that means equity is probably up. Gold will probably perform reasonably well, but it is coming into a seasonal sell signal at the end of the month. And as far as the foreign exchange markets are concerned, the big question on everybody's looking at here is, have the commodity dollar currencies, so Aussie, Canadian, and Kiwi especially, I think, with the coming out of lockdown, hopefully in a couple of weeks' time, have they turned a corner against the US dollar? And I think that's the major question for me. We've seen weekly charts which have performed, if you like, a little bit better than where the stock markets have performed. Yes, they sold off aggressively to start with. If you look at the Aussie on the weekly chart, it sold off aggressively, but it's come back a little bit now and is trading very well. So, you know, it doesn't take too much of an expert to say, probably given that sort of pattern, if, and this is a big if we believe that the Fed has done enough to put enough dollars into the system, be it domestically or internationally, does that then mean that the currencies are therefore, as they are secularly cheap, not going to get any cheaper, and therefore we should be looking for buy signals? So I think that's the key thing. Until we sort of violate the red bar, lowest candle that we've got there, that red bar candle, until we violate that level there, that the Aussie pool, until we violate that one, I think you can probably work the Aussie from the long side, and you'll see similar patterns popping out in the Kiwi as well too. The Canadian's a bit muddier, but it's still pretty good. And for those of you that like a pseudo oil play as well too, maybe go no further than maybe the Mexican peso as well. One of my favorite cross rates. That's come down significantly from about 25, 26 against the US dollar down to 23.30, I think it was on Friday. So a significant potential reversal happening in the Mexican peso as well too. You know, again, that's not surprising. There's a bit of an oil influence in that market, but also if the Americans are starting to get the world under control and we're all heading back into a lovely space where not quite where we can hug again, but at least we can do business with each other, then I think some of these extreme moves will start to unwind themselves. It's not going to make it easy for us foreign exchange traders because it's still going to be very volatile. But then if you sort of choose a direction and have a go for it, I think that's probably the best way of thinking about it with all the necessary stop losses. So this is always the same. I say this every week. It's so important now to stick to your process and stick to your knitting, and then try and also make money where you can. So if there's a move that can last 4 or 5 days, you can see substantial profits, and that's what I'm really looking for. So buyer of Aussie, seller of Mexican, seller Canadian. Still quite warm against the against sterling as well too. Again, not so clear. Euro, I'm not exactly sure what's going on. I guess Friday's performance was relatively positive. I'm just going to go with relatively positive. But anybody who looks at a Euro chart and can make any sense out of it is doing quite well, I think. It may be a major bottom. It may be a major bottom, but who knows? And until we get a bit of a better picture, there are probably other easier trades wandering around the system. So that's my 5 cents, Paul, about what's going on. Did I say I love gold, and did I say I think oil's probably going to bounce again? But I don't quite know how much it's going to go down before it bounces first. And that's my thinking. Over to Ainsley on those two for sure.
Cheers, mate. Well, quite a lot, quite quickly. So looking for commodity currencies to rally a little bit. The Aussie, the Kiwi, the CAD. Looking for the dollar mix to sell off a little bit. So a little bit of dollar weakness around for you. Looking for gold to rally around some reasonable recent highs, not far away. So we'll have a test of those not far away. Perhaps a break of those would be a nice sign for the bulls on gold. Certainly, I think a lot of talk in favour of in gold at the moment. And oil, well, Ainsley will bring us up to date on oil, but complicated. The Mexicans have made the oil play a little bit more complicated than we thought it was going to be. Anything else from you, Julian?
Yeah, look, just overall, I think my theme remains. There's a lot of people out there talking about this isn't going to be inflationary. I'm really sorry, guys, but for those people who are calling deflation out there, I'm not quite sure where they're living. Everything I seem to be buying right now seems to be more expensive. I haven't seen anybody discounting anything here. And yeah, there's a limited number of stores that are open, but none of those prices seem to be going down. They only seem to be going up. So I don't think that there may be some deflationary elements in the system. And that may in the very short term may work, but in the medium term, this is an inflation market.
Is this a timing thing? Are we 100%. Saying that when we come back, let's say that a month from now, lockdown ends in New Zealand, for instance, we're all allowed back out, and that a bunch of people have lost their jobs and a lot of businesses have gone under. For a period of time, we may see some price competition driving some price down, but in the long run, we've actually got less business and less competition. And as people do come back into employment, monetary policy is very inflationary. This inflation, are you thinking it's 3 months away, 6 months away, 12 months away?
Yeah, it's a really good question, Paul. Look, without putting my economic hat on too much, and I'm not sure we got time for it here in terms of a trading position. I think the key thing to remember is that history has many, many inflationary episodes. There's a lot of evidence going back a couple of thousand years that you can pull out if you were doing a PhD in this stuff. And almost every single one without fail has started with a deflationary bias first. What's changed in here is the government's willingness to print money, and to print money on a scale which has been unprecedented in modern times, certainly for the last 70 years. So
you were talking about America last week.
That change, I think, is significant.
What happened in America last week? That sounded astounding to me.
Just $8 trillion. So the Fed announced pretty much a buy program, which included everything apart from baseball cards. So I was quite surprised by the extent at which they're doing it. Maybe not the extent, but the timing a little bit. There'll be a lot of talk around, and this is sort of gets the plumbing of money markets. And I've been talking about this for some time. This may help to alleviate some of the dollar problem. I think they're storing up greater problems further down the road. And having a Fed balance sheet of $9 trillion is unbelievable, actually, on quite a number of grounds. But then these days, the unbelievable seems to be the possible. So my view remains that I think we will, this has given the markets a secular inflation boost. And I also want to bring attention to the listeners is that every time we do this, right, this is with these cycles, 2008 led to a new era. Let's call it the social media era, which sounds a bit kitsch. But if you think about what happened in terms of assets, those assets involved in social media and also other parts of the software as a service have done amazingly well. I think a new era is coming. I'm not quite sure what it's going to look like and what the key industries are going to be, but out of this, there will be a phoenix on its way.
Look, I'm going to ask you a question, Julian, just on behalf of other people in the room. I don't know if this is monetary policy these days is just see if you can push the crap out another 2 weeks. There's no real, it's about let's ban this today and we'll worry about tomorrow. And they just keep pushing more and more trouble just out in front of us all the time. Eventually we're going to catch it, right? If you are answering, you're on mute, mate.
Yeah, look, the monetary equation, right? So I'll literally 2 seconds on this and then I'll finish.
Yeah.
The monetary equation is MV equals PT, right? So that's basically money times money or inflation is the amount of money that's been put into the system. So $8 trillion times the speed at which it runs around the system. Now, if the velocity, that so-called velocity of money, is constantly falling, which it has been for the last few years, regardless of how much money you put in, if the velocity is going down, then you can't get inflation. It just doesn't get any traction. However, you reach a point in time where that velocity bottoms out. When that velocity bottoms out, inflation, given the extent to which you've put money into the system now, will simply explode. Now, the challenge that everybody has is that we've had 30 years of deflation, and I don't think there's any institution in the world equipped to handle inflation. And also, in terms of people's livelihoods, is it easier to run with 5% inflation or 10% inflation, but everybody's got a job? I think there's a lot of governments right now that would get elected on that platform, and that significant shift in sentiment, right? That shift in sentiment has occurred, but I think it's subtle right now. It's not shouting, it's just there speaking softly, but it's coming. And that sentiment will lead to a shift in many things, especially a new era in terms of what's going to be the right business to be involved in.
Interesting.
So, that doesn't answer the why we're going to trade, Aussie on Monday.
Yep.
But what it does do here is give you some contextual background for that incredible dollar rally that we've seen over the course of the last 18 months. And the extent to which it's got to continue and or not, right? And if it doesn't, and there's going to be a secular shift away from US dollars, then if you think what we saw on the rally was interesting, when people start to leave the dollar, you ain't seen nothing yet. The thing will collapse like crazy, and then that's going to have another set of impacts. Putting the Aussie up to 120 or the euro up to 160 or 180, these sort of numbers are crazy, right? And we could be back up there really easily if there's a collapse in dollars, which again, digital currencies are here, and it's going to come from, maybe the Fed won't do it, but this will accelerate digital currencies in the States, right? Not Bitcoin, but the US dollar in a digital fashion will come in enormous amounts and with speed now. So there's a few things that are going to change. It's fascinating, and that will have an impact on the Forex markets. And it puts you in a position, if you understand some of these fundamentals, to actually commit to some of the trades that you'll see a little bit harder.
And if you don't understand some of these fundamentals, join us every Sunday night and we'll talk you through it.
Yeah. Well, as it develops, hopefully we'll be on top of those.
Yeah, be neat. And at the end of the day, Julian, inflation is good for those that have borrowed. So
100%.
There's a lot of countries in the world right now that could really do with some inflation, because it decreases your debt in a real term. I don't want to try and get into that economically either, but fascinating time coming, and we will stay on top of it as we go along week by week, and we will tell you more and more as this develops. I mean, we are right at the start. This is the start of a new dawn of finance or economies. We're right at the start of them, and what it's going to look like, we'll have to see it unfold, but we'll keep you informed as we go along of what it is and how we think it's going to work and how we think you can make money from it. Right now, it's still a time for caution. It's a time for staying with your knitting, controlling your risk, doing the basics really well, and letting opportunities present, because they will present. Is that you for today, buddy?
Yep. Thanks, Paul.
Cheers, mate. Thank you. We have got Ainsley and Jeff with us. I think we will go to Ainsley next and hear some more on gold and oil, because it's a gold and oil type market, isn't it, Ainsley?
It certainly is, Paul. It's been an interesting week. Could you put up a gold chart? Let's start with gold.
Let's start with gold. Let me. I've got a gold chart. Look at me. There's a weekly chart on gold right now. I'll go to daily for you.
Ta-da! Thank you.
There you go.
Hello, look at that. We had that retracement and then off she went. So
Yeah,
she's
it's,
still quite manipulated. And you can see that every time you pick up, look at a chart and you look at the spreads on a gold chart. But as I was saying, it's just gold is still looking very shiny at the moment as one of the only things that makes any sense in this economy at the moment. It's safe. The demand's still there. That's why we've had a lot of upward pressure for the whole week. I think it's going to continue. I think it will keep going because as this situation continues to pan out, I can't see it coming back. I don't think people are going to start selling their bars. We still have the situation where people are needing gold for whatever reason, but we've also got people hoarding it.
so when you say you can't see it coming back, we're going to get a retracement at some point, aren't we? We've seen a nice move up there, came back, hit the
Yeah, came
38.2, jumped in
Profit
again,
went.
and I would imagine it'd be interesting to put that fib on the other way around. Do I have extensions on this? Yeah, it does interest me. 1.618 extension. I do feel like we maybe. I wouldn't be at all surprised to see a little bit of a pullback before we rally again at some point. You think that we might test these highs before the pullback?
1700.
Maybe. Sorry.
1700. You'll see it. You'll see it
1700.
test around 1700.
Makes all kinds of
last
sense. We'll have a little look at 1700, then perhaps the pullback, and then once we've done that, as we've done here, we had a look at 1700, and we pulled
And
back
pulled.
to here. We'll
Yep.
have another look at 1700, maybe have a dip into this area here, and then we will blast our way through it as the theory at the moment, right?
Agree.
So look, actually, do you mind if I jump in for a second?
Sure,
I
go
wanna talk-
ahead.
Look, if you're looking at this chart, I don't think it's time to buy gold. I mean, you may be okay up here, but I do want to talk
Don't
a little
buy
bit.
it. Yeah, you don't
about
buy
that.
up there. If you're in, you're in. But
Um,
if you're not in, don't go buying at the top of an extended market.
A lot of talk about at the moment. I've been seeing some articles by Paul Hutton actually about sorry guys, well, lots of stuff on YouTube I haven't able to answer you about lots of retail traders diving into stock exchanges at the moment. I encourage you guys to be careful.
No.
You know, everyone in their dog. I think I'm the only person in the world that hasn't done a value investing course in the last 5 years or 10 years. And if you did a value investing course 10 years ago, you've waited till now to see a pullback you can buy. And I'm going to tell you this, if the retail traders are leading this buying, they're going to get slaughtered.
Oh, for sure.
You know, if this institution's then fair enough, but this is a different world to what I told you about in those courses, guys. There will be publicly listed companies go bankrupt in the next 12 months. You are not safe to just buy here and sit stuff out. That is not a realistic, that might be fine in the classroom 2 years ago. But right now in this world, that is a dangerous, dangerous place to be. And if you don't know if you're not Lloyd, that kind of person, you don't Ash, if you don't know what you're doing here, you need to be, I mean, and again, look, it's your money and I can only tell you this is only my opinion. Okay, you know, but my opinion here is that caution would be I would be being very cautious at this point on this. I took us all the way from gold to have a ramble about that stuff. I do apologize. Let's get back into gold and there it is. So we're talking a push up, maybe a pullback, and then maybe a rally through. And, you know, the talk again, I imagine we're in April, we're around 1700. The talk, as it always does when gold spikes, will be 2000 by Christmas, won't it?
That's what they're saying.
Yeah, wouldn't be
hoping.
surprised.
I'm hoping. I'm hanging in there.
Look, they've been talking about that now for maybe 6 or 7 years at different times. Gold's rallied, but you know, right now,
We've
again,
not had a situation like this before.
Yeah, and gold's one of those really cool things because if there's inflation, gold will probably rally, and if there's deflation, gold will probably rally. So you know, it is a safe haven currency and it is a commodity, and either way could see it well push up, and you know, maybe that Christmas rally where you made all your money this year, Ainsley, on that big trade, not all your money for the year, but that big trade, that may well be when we have a look at 2000. What was that? Sorry.
That was for the month. I got 2 kids. It's expensive out here.
Yeah.
No, I'm well on my way with this last trade to giving that one a nudge too.
Nice. If your broker will behave,
that's not bad.
Guys, stay with decent brokers. Let me tell you, stay with decent brokers in these times right now. So we have a look at oil. I think the oil picture is a lot more complicated, isn't it, Ainsley?
It's giving me a bit of heartburn. Yeah. So Thursday, the 9th of April, was the big D-Day where we were having the trying to get the Saudis and the Russians to play nicely. And it seemed when with one of Donald Trump's early tweets was, I'm sure they're going to work this out. I'm sure they'll get it all sorted. So he obviously knew something that was going down. And sure enough, the Russians and the Saudis have agreed in principle to a historic 10 million barrel a day, 10 million barrels a day. They were trying to get 400,000 out of all of the OPEC countries, before 600,000, sorry. And now they've all agreed, bar one country, to a 10 million barrel a day cut. On the back of that, the price of oil buoyed up over $28. And I thought, here we go, we're doing really well. And then it just didn't take up any further. And it turned out there was one little stick in the mud during these meetings, these OPEC meetings, and we've got one country who will not sign off on the deal, on this historic deal, and it's Mexico. And
You know, Ainsley, I can actually see Trump said we're going to get this sorted out. The Russians and the Saudis made an agreement. I can see Trump having the press conference booked. I can see him walking down to gloat to the world when the Mexicans just go, pull the carpet out. Sorry, buddy. No gloat today, buddy.
Didn't happen. And so you can imagine he went another shade of orange. He went probably purpley. Because Mexico, a country he has pushed around since before he was elected, has gone, yeah, well, don't care. Turns out Mexico, and it's come because I've been following it all weekend, trying to work out why this has meant anything. As we said, Mexico is a bit of a minnow in as far as it's not a big player. It's not Russia. It's not Saudi Arabia. It's not one of the big main countries, but it is an OPEC plus country. So it still produces a fair reasonable amount. It has been on a 20-year program with an obscure Wall Street hedge fund, protecting its oil prices with future contracts and options and puts and calls and all the rest of it. So for them to stop pumping means that they don't get paid. So they keep pumping the oil, they're going to get paid at their predetermined last whenever prices. So for them, Pemex, which is their big oil company for the Mexican government, is going to be completely protected. So for them to cut, they don't want it. How that affects OPEC, it obviously brought everything to a screaming halt. They thought they were going to get Mexico. I don't know, maybe the Russians were going to send some friends around and try and get them to see it their way. Don't know what happened, but they still haven't signed off on it. So we're probably, until this is all agreed to, major cuts, we're probably going to see a little bit more of a dip down on oil. How much further that will go before the Saudis and the Russians and the Americans, because the Americans are in burn territory as well. They need $40 a barrel for their shale industry. Their shale oil is sensitive as well. So they do need this price to go back up. How much further, how much longer this is going to go sideways, and how much more this price will be manipulated, can't tell you. I read a Citigroup analyst saying he could see oil going to $8, which is just phenomenal.
Which is the marginal cost for Saudi, right?
Yeah.
So
but Russia isn't in that boat.
Sorry?
Russia is not in that boat. I'm not sure what their price is, but it is not the same for Russia, but they do need to get that price back up. And the shale oil guys have already gone to Trump, apparently Thursday, I think it was, asking for concessions and bailout money. Not even tariffs, they're just asking for the money because they're burning. So if that's the case, and I'm sure with everything else being a bigger priority, as Julian explained, 8 trillion. The Fed's just gone out and just said, yeah, we're going shopping, effectively, and to keep everything going. But oil asking for concessions, they were looking for tariffs. The tariffs were threatened, and it was just a threat, but concessions is actually Trump having to go and get his money out of his wallet. So that's a whole different story altogether.
I've got a question for you guys, and it just astounds me. And you guys are better at some of the stuff. I mean, maybe Julian's and I might offer opinion on this. I can see I've got Orlando and Paul Hutton talking in the YouTube group as well. But have I got it right? The Fed have put $9 trillion worth of stimulus into the US, and the US isn't even closed down yet. That's still to come. New York is going to have to close down, and it's open right now. So even with their country not in close down, they put $9 trillion in. When you're heavily in debt, how much money can you print to keep yourself up?
Paul, what I found was interesting was a comment made by a commentary that was just saying, we are writing checks we can't cash, basically. And they just said, we are printing money, we are going into levels of debt, and not just when I say us, I'm not talking about Australia. All the governments around the world are going into such levels of debt. Our grandchildren won't be seeing a surplus. Our grandchildren won't be seeing this out the other side.
Yeah,
we're
all the
putting
countries
future
in the world,
generations into it.
Not China, not Singapore, not the Middle East. So you Western democracies, you mean, right?
A lot of them.
Yeah.
I don't think
almost every Western democracy is financially screwed.
Basically,
And
well, Julian said there was 80 countries looking for a bailout from the IMF. 80, that was last week.
Yeah, God knows how many is today. And
doesn't the scream of a recalibration coming, guys? And what that looks like?
I think you've got to be careful about when you. I'm pleased with that part of the comment, Jeff. Yeah, I think not screams off. There's a recalibration coming. I think you've got to be really careful of the conspiracy theories at this point. I'm reading some stuff recently about how the US and China have done this to each other deliberately, and I think that kind of conspiracy stuff, and certainly there's some political sizing of it in New Zealand where it's, I've got a political view in New Zealand, and I still think that the party that governs is not my party. The lockdown was a great decision. You've got to be prepared to say credit to them and step out of the politics. There's people dying here. You've got to step out of the conspiracy stuff. You're talking about literally tens of millions of people's livelihoods going to change in the next 3 or 4 months on this planet. And is there going to be a recalibration? I think there is. I was sitting here today actually, and I was thinking, hanging around the house all day, it's not the worst thing I've ever done. I'm not hating it or anything. It's just for some of my kids, it's not. And do I really want to go back and travel around the world and spend time away from them? There's not a lot of financial upside for me in doing that. And I probably will continue to do it because I love the work, I love the people. But there'll be some people in the world whose priorities will change after this. And some people who worked really hard will stop working really hard. And some people who haven't had to provide during this period will start and work really hard. And there will be a recalibration. And what's important, I think, really is neglecting your children to get another pool really important? I think that's going to get some airtime in the world in the next year personally.
I think actually having washing up liquid that doesn't wreck your hands, because I've done a lot of washing up in the last 2 weeks.
Look, it's funny because I spoke to your wife and she says you're still a long, long, long way behind.
So that's a lot more washing up coming your way, Jules.
It's
not responding.
You're dropping out. Can't hear you.
But we are. I think, one thing I think you got to be really careful of. I don't like the conspiracy stuff. I think that one of the truth is that as normal people in the world, we have to accept that we're going to be spectators to a lot of what happens, and we just have to do our best and live our lives. But the stuff that goes around on Facebook where, other countries have deliberately infected other countries, that kind of stuff shouldn't be spread without it being evidenced by real evidence. And, I don't believe it personally. But I also think that the recalibration of the world, I don't think we're heading for massive social unrest. And I think we're probably not heading for massive social unrest, but I think we are heading for change and serious change. And, there are going to be some people, and not one or two people, that have done everything that was in the textbook 6 months ago. They've lived their passion. They've had their dream. They've fully committed to it. They've found the thing they care about. They've given their whole life to it. And next month they're bankrupt.
Yeah.
And that's not how that story was written. We weren't being taught that in those courses 6 months ago, were we? We were told, go to business course, do what you're passionate about, be committed to it. You'll become rich. That's what they told us. It ain't happening. Not for a lot of people.
Leveraged in commercial real estate at the moment, I wouldn't have thought.
Oh,
Look, it's like anything, Jeff, isn't it? There's, when you say that, if you're over leveraged in anything right now, you're probably in a lot of trouble. And if you've got some cash, you've got some opportunity coming to you like we haven't seen for a long time. It's not here yet. Don't jump in the stock markets yet.
Real estate when it comes back, and I don't know how many or what percentage, but a whole lot of office people at the moment have got to be thinking, hey, this is not so bad working from home. You just said it, Paul. And I would imagine that there'd be people renting office space, you know, for 10, 20 grand a week or a month or whatever the case may be, that are recognizing that they don't need to do that anymore.
Look, you know, it's interesting. I was talking to a very wealthy businessman that we all know recently, and his staff are working from home for the last week, and businessmen are, I don't know, but he's talking about lack of productivity, not getting stuff done. Whereas for me, my staff have worked from home forever. You know, James worked from home last year. He worked from home. It was no difference to me, right? But to some of these guys, I think that their paradigms will see this as a failure. And to be honest, you know, there'll be some staff who do a not as good a job. There'll be some who do a brilliant job. Some will get home and, you know, they'll love it. You know, and I think you have to be realistic right now too, because quite often when you've got staff at home at the moment, they're having to look after children, which they wouldn't have to do working from home at another time. It's not really a fair comparison, but I'm not sure it's as simple as that yet, Jeff. It may be as simple as that, but there's certainly
that's just the tip of the iceberg, mate. There's a whole lot more that I haven't even dreamt of yet that's going to change. There's no question in my mind.
Oh yeah, look, I think there's a lot coming. The head dude from AirAsia emailed us all today, and I thought it was a great email he sent out actually. But you know, one thing he said is, you know, look, at the end of the day, we're just doing our best. You know, there's no answer to all this stuff. We're just doing our best. You know, we're giving you credits because that's what everyone else does. And honestly, if we give you all the refunds, we're going to go broke. So no one wins out of that. So, you know, there's a lot changing. As I said at the start of the show, the world is changing at an unprecedented rate. And you know something else, guys? I wonder how many people in the world are just sick of that. I'm 52 years old, and for every year of my life, the world has changed quicker and quicker and quicker. And I wonder whether there's just going to become, at some stage not far away, just a desire to just spend a little bit of time where the world's been this sort of the same for a little while. My God, it changes quickly today. Anyway, we're getting a little bit off track, I think. Perhaps we're not.
Not really.
I don't think so.
But you know what? I'm glad I can trade. I'm sorry, but and I know that sounds really cliche, but I've got
in 2 weeks in
girlfriends.
December, you made more than the average wage in Australia. And being able to do that in this world, and you've just said the trade union at the moment is similar kind of ability. The ability to do that allows your children a future that a lot of kids right now in the world just can't be guaranteed.
I know. I'm hearing it. As you know, the girls go to a fairly prestigious eastern suburb school, and school fees were posted or emailed out last week. I went, yep, cool, no problem. And some of the girlfriends are just saying, don't know how we're going to do this, lost the job, the husband's had to take a pay cut, we're doing this, we're doing that, trying to sell these things. And it's just, yeah, it's just how times have changed. But
The world as we
to
know it
have
is
have something like this where you're watching a market, you can trade the market. I did it because I wanted to be at home with the kids. And
look, I'm going to dodge off here for a few
amazing.
seconds. And Ainsley, how hard was it? So it's taken you, from my recollection, about 10 years from stay at home. In all honesty, I think it's fair to say no idea of the markets. You got some help from some pretty good mentors, but you know, how long did it take? How tough was the journey, do you think?
It was tough. I started this when my girls were little. I was a full-time mum and trying to do some other things on the side, and all the rest of it. And if you've been at home with kids at the moment and juggling kids and activities and learning and all the rest of it, you know that it's full on. I'm not the one that sits around and does lunches 5 days a week or anything like that, but to get to this point, yeah, I've put some really hard yards in, and a couple of times I wanted to give up, but if I hadn't started and kept going and thank God I had some people who kept me online. And I mean, our last event, you're asking about the gold trade, and and I said to you, Mike, I went to my coach who said to me, I said, I don't think I can trade this gold at all. It's flicking around. It trades very differently to the FX assets that I'd been trading. And I was just told, I said, look, seriously, I think I'm better off wearing gold than I am to actually trade it. And there was a bit of a giggle. And then I was told to get back to it and try again and keep trying until you start making some wins. So I did. So how lucky am I that I've got somebody that actually just kept me on track and kept me going on that. And if I hadn't done that, I would not have done that trade that I did in December, January.
How important is having a coach who's prepared, with due respect, I mean, this sound rude, but have a coach who's not prepared to put up with your shit and just go, actually, you can do this and get on with it, as opposed to letting you opt out. Because if you let people opt out, they'll opt out. Yeah, it makes a huge difference at the end of the day. It would have been so easy for him to go, okay. I mean, he hasn't made any extra money from you trading gold, has he? He could so easily have gone, I don't care, just don't trade anything like this, don't trade it.
No,
but
that
a bit of
coach
toughness
actually
can do the world of good.
That's right. Well, that coach also made me go and look at oil. Hello, oil and gold. How much money? I mean, I've got to say I've made more money out of gold and oil over the last couple of years than I have out of my FX trades.
Look,
How's that?
I do want to, it's really cool. I do want to move along. And I think the message is find something and become really good at it. Become a Euro expert, become a currency expert, become a gold index, become an oil expert. Find your thing, become a great price action trader. That's the same one thing, become a great price action trader. You know, become a great fundamentalist. Work out how to use seasonality better than everybody else. Get caught and get really good at it. And if you find one thing and become really good at it, you'll make money from trading Forex. If you find 30 things and become quite good at them, you'll get smashed to pieces. Just doesn't work in this game. Find your thing and become really, really good at it.
Yeah, they all trade different, but yeah, couldn't agree more. Couldn't agree more. But get a good coach. You still there?
I'm still here. I'm just reading some stuff on in my Skype, which isn't pleasing me too much. Okay.
Okay.
Right. I think
I'm going to let Jeff go on the Aussie dollar because I missed the entry on that one. I was dirty on that, and it was something I was watching. But over to Jeff on Aussie because she's had a really good run up as well.
Look, I might just ask while you guys are here. We've had one of the guys in the room. I'd like to give the guys in the room's priority on the questions. Ask us any thoughts on dollar yen.
Bearish.
Jeff, you're bearish.
Mm-hmm. I'm bearish the dollar, full stop. Dollar versus tiddlywinks, bearish.
Look, I'm going to give you guys a couple of levels that I think are really important on it, right? So you take out monthly pivot and I'm bearish, and you take out 109.24 and I'm bullish. And it's just cyclicity for me. Right now I've got a low, a high, a high, a low. So I've got the start of an uptrend here, and this could continue through this area and put in a high. But I've now got a high, a low, and a lower high. You take out this low, and I've got a lower high and a lower low, and I'm bearish. So I'm pretty much in this area through here. I'm prepared to be a bit neutral. Now, when I say that, Jeff's going to show us in a few minutes why he's bearish, and it'll convince me I should be bearish. But you know, just for me, I can see this is one of these charts that's great fun because excuse me, up, down, uptrend, down, up, downtrend. And cyclistic can go either way here. So for mine, I wouldn't mind the cyclistic getting a bit clear before I jump into it personally. But I'm keen to hear, Jeff. So over to you, buddy.
Yeah, mate. I'm trying to avoid the noise at the moment, and I think I've been like that for a few weeks. And one, I think, hourly or 30-minute trade proved it to me only a week or so ago. Screen share. Let me try that. You'll have to stop, mate. I think. There we go. All good.
You got it. Yeah.
So there is the dollar yen chart. And the reason I am bearish is pretty much because of the market structure that I see in front of me. And that market structure tells me that you can even come off these highs if you want, where we put in a lower low, we put in a lower high. And since then, we've just done exactly the same in a very, very uniform, if you like, descending channel. The previous month's bar or last month's bar was a corker. And making sense out of that is very, very difficult. And this is not dissimilar to euro dollar chart, I've got to tell you. Very, very similar in the way it's been reacting. But that bar, and I understand why, Paul, when you look at that bar, you're thinking, yes, if we go here, we're bearish, and if we go there, we're bullish, because that bar is just crazy, absolutely crazy. That's a monthly bar that went in a flash. In a flash to both extremes. So what we've done since, and we have to crawl down a little bit into the smaller time frames to see this clearly, this one being the weekly, where we took the stairs up to the top of this descending channel, and of course the elevator went into hyperdrive and took us straight down to the, well, not really straight down to the bottom. Well, yes, it did. And then we just skyrocketed back up to where? To the top. So it's no surprise when I see us come off the top that I'm looking for it to go back, not even to the bottom, but towards the bottom. If we're nowhere near the bottom, we've just come off the top. So when we come off the top, I'm looking for a lower high. I think we got that on either a daily chart or a 4-hour chart, something like that. Well, there it is. That's the daily chart you were looking at before. That to me is a lower high. I got in on a 4-hour chart, I think, or something like that. Can't quite remember, but I'm in there now. We've gone straight into consolidation, and I've taken TP1, and this is pretty much the modus operandi at the moment. For me, it is get the direction that I seek to trade, find an entry, and get as safe as I possibly can, as quick as I possibly can, and find the profit in the extension, not in the initial move. I think that, to me, is a pretty safe way to trade at the moment, if there's such a thing. But I'm certainly having success in playing those cards. I've kind of gone this way since coronavirus, or maybe even a little bit before coronavirus. And I think the macro picture to me is telling me what I need to know in terms of potential direction. I don't know that there's a system that I could play on the smaller time frames the way I trade that would make me profitable at all at the moment, because the stops would have to be so wide for me that they would cancel out the very thing that I've just expressed to you, and that is taking early profit. Because of taking early profit to me is, 6-10 pips into a 30-minute candle. If I've got a stop of 60 pips or 70 pips, that doesn't make sense to me. So for that reason, I'm tending to play the daily charts, even the weekly charts, but certainly the daily and the 4-hourly charts, because I think they're far more clear. And yes, you do have to take 200 pips of risk, sometimes 300 pips of risk, but the potential gain, if you get it right, trading from here or even from here to here, is substantial. So I think that's the way I've chosen to trade.
I saw some recent results from you, and you're on a decent run, aren't you?
Yeah, I think it's working. I don't have any issue with what's happening at the moment. I think I picked my mark as I've been counselling all of the people that are in my group. I've done that not only on the macro situation in terms of the chart patterns, but I think it was fairly obvious to me, and I hate to use the word obvious when I'm talking trading, because what may be obvious to you is certainly not obvious to other people. And in my case, that's often the case. But it was obvious to me that the Aussie was about to turn around. It was obvious to me months ago that the Aussie had to go as short as it possibly could before it turned around because of the circumstances. And, you know, I've said this many, many times in the last few weeks. The Aussie came to a point where it became a level playing field between the Aussie and the rest of the currencies, because the Aussie had been under so much pressure for so long. Coronavirus has actually done the Aussie a favour, I've got to say, because it has produced a level playing field in many regards. Not only has it done that, if China is indeed in the position that we're led to believe it is, and that is they've come out the other side, basically, and now going into production and manufacturing, I won't say unaffected, but certainly getting back towards the volumes that Australia in particular would like to see, because it's a major supplier, but more so China is a major customer of Australia, if that makes sense to you. And the resource-rich country that Australia is stands it in very good stead. Not only because of that, but China have control of most of Australia's ports. So they tend to come to Australia very, very easily and rapidly. Those sort of reasons led me to believe that the Aussie has to rally. And I listened to the fundamental commentary of, in particular, Julian, who's telling us that the Comdols are due to rally for similar reasons to that I've just discussed. And, you know, when you're coming off the bottom of a channel, it doesn't really need to take too much to get into a long here. Now, I chose not to trade the Aussie US dollar long because I didn't trust what the US dollar was doing at the time. But I've found better ways to trade it in pound Aussie and euro Aussie, both of which we've been short on for some weeks and doing very, very well out of those. So it's been, I guess, a bit of a fun journey to date. We saw an incredible, I haven't seen one as strong as this in many, many moons, incredible tweezer top sitting there on the weekly chart on pound Aussie. And then we got the lower high, and well, fortunately, we found a way in there at this point here. And that's just been having a wonderful time. I've taken most of my profit at this level here, but vowed to get back into this because I think this has got a long way to go if things turn out okay. Euro Aussie, pretty much exactly the same. We had a very strong suspicion that this bar here meant something, was at the top of an ascending channel. And this is, again, it's the major theme that I'm playing at the moment. If we've got a structure that tells me that something's about to turn around, well, then you just go into turnaround mode and think, well, okay, how do I get into this? And nothing's really changed there. It's just a matter of finding a reversal pattern and a lower high, or in this case, a reversal pattern and a higher low. And those two systems are working hand in hand, and ain't got no complaints, mate, at the moment. Got to be fair. I'm even finding weird things like CAD Swiss, trading that off the bottom to the top here. Still in that trade actually, but I've reduced a lot of the money that was available. Swissy and is a similar thing. We've got a triple top in play here and a lower high. That's the kind of thing that I'm looking for at the moment.
Nice, man.
I think that's probably tomorrow morning special, this one for me. But this one doesn't agree with my bias, I've got to say, because I think the Swissy has got a stronger chance of rallying than does the yen, because I've got this thing in the back of my mind that's telling me that Shinzo Abe has been screaming out for money. They appear to be very, very short of cash. Well, they're in a fairly robust club at the moment, one would have thought. And if not at the moment, then as we've just discussed throughout the show, that's going to be a thing, and a very big thing as we move out of coronavirus. God knows when that is, but I think the cash-strapped, not economies as much, but the countries, the sovereign debt and all the rest of it's just going to be horrendous. And I don't think 2008 has got anything on this. This is going to be serious. And I do think we're going to have a lot of change. But I think the yen has probably got a little less reason to rally than does the Swissy. And I'm actually a Swissy yen bull, but at the moment I can see a lower high sitting there. So I may look to trade this down to the weekly pivot at least tomorrow when the market opens up. If it opens up in sensible territory, shall we say. We could see gaps. I don't know that much has happened over the weekend to promote that, but I'll be looking at that first thing in the morning. We shall see.
Yeah, cheers, mate. Nice. Weekly pivot will come on a little bit towards you tomorrow, I'd have thought.
You would have thought, yes. We may see a
bit
weekly pivot, monthly pivot, a little bit of a backstop there, so a bit of support underneath it, maybe.
Sure. Okay.
Euro
Any more from
pound. Yeah, Euro pound.
pound, yeah.
We traded this down again off a market structure. It was the top of a range. We traded this, made an incredibly good exit, I've got to say. And that was it there pretty much. That is a pretty good exit when I look back on it. I see now that we've gone into a range here, and I looked at these candles last week pretty much on both the daily and the 4-hour charts, and they looked to me to be, wow, if you're a trend trader here, you're probably looking at those candles going, I've probably got to get in here. I withstood that temptation, and the reason primarily is because I thought we needed to have a little bit of a look at the monthly pivot, which we haven't done yet. So I've withstood that temptation to trade this short again, despite the fact that the candles look fantastic. So I'm a little bit still waiting for the top of this range again. And if it's broken, maybe looking to trade it back to monthly pivot. So this will be a 4-hour trade, probably come Monday, Tuesday, goodness knows when, but I'll be looking for a higher low here and looking to trade it, taking profit obviously at the weekly pivot, but leaving something available to the monthly pivot. And as soon as we get there, then I will change my bias to a bear again, because I still think there's plenty left in this one as well. I think we can get down to 83. And if that's the case, and we can find a way in, we've done fairly well out of Euro pound in the last month or so.
Nice, mate. You have done well over it, haven't you?
Yep.
It's been a sensational run, Jeff.
Well, mate, I think it's just a matter of, I said when we went into this period that here's what I'm going to stick to. And unlike I've probably been apt to do many times before, I actually have stuck to that very rigidly and not wavered one bit, and it has paid dividends.
Do you think being on the live YouTube show with Ash helps that? Being in front of the charts, talking about them to other people, does it help to keep you?
Look, I think, and I would absolutely counsel anybody to have a trading buddy, and I think it's invaluable. I think this show's invaluable because you're subjected to or made aware of things that you probably don't even think about day to day, and you don't need to trade those things. But if you can think about the potential repercussions of, or not even repercussions, but the potential for you to not second guess, but add that to your bias, if you like, or consider that maybe what you think is not the only way to think it. And if that's the case, then, well, just ease off the pedal a bit. Maybe you still do what you wanted to do in the first place, but it may cause you to take A, an earlier profit, or B, maybe that support level that you is just a little bit close than you would have liked shouldn't be tampered with, and just wait a little bit and see what happens.
You know, Jeff, we talk about having a trading buddy, a small group of trading people, one, maybe two, maybe a group of two, maybe three, on the IFP where we sell a mentorship program. And I think because we sell a mentorship program, people don't take it seriously. if you just do the stuff we say on the IFP, instead of having 70 people in a group, one of whom broke the rules and lost $20,000 in a day last month telling you what to do, instead of doing that, find 1 or 2 people you can trust and trade with them. That'll get you where you're going. Having 70 people, 50 of whom don't know what they're doing, telling you what to do to have a chat with, it ain't going to help you. Getting yourself into a small group, and it's not like Ash is the first person you've ever met in the trading world, but finding the right person. In fact, I would have said that you and Ash perhaps weren't a pair made in heaven for trading together, and yet it's worked out differently. It's worked out brilliantly. You never know what's going to happen when you find different people to trade with. So that kind of stuff is really powerful. Find 1 or 2 people you trust and who will hold you accountable. Just like the mentor kept Ainsley trading gold, hold you accountable. Just like Shirlene kept Lloyd trading. It's why he still makes a living from this. You've got to find those people, and they're really valuable.
Yeah, look, I don't kick Ash up the bum, and he doesn't kick me up the bum, to be fair. But when I say something that he knows I'm fully into and are convinced of, I'm sure it makes a difference to what he's thinking, and vice versa. If he says something that I know he's really on top of this, then I've got to have a little bit of an opinion change on that, perhaps. And as I said, doesn't necessarily mean you change your trade in terms of direction, but it may mean you change your entry, may mean you change your stop loss, it may mean you reduce your risk. All of those things absolutely help.
The other thing, Jeff, is when you say you're going to do something in front of someone else, you do it.
Yeah, that's true.
And when you just look at the chart and tell yourself you're going to do it, there's a lot of room to get out of that. But when you say to your mate, I'm going to trade this and get out at this point here, he's going to ask you 2 days later if you did or not. And, not even in an accusatory way. He's going, oh, mate, that was a great trade. Congratulations on getting that. And if you have to go, no, I broke my rules and didn't take that. It's terrible, right?
Yeah, that sucks. That really sucks.
It holds you accountable. It's not that they hold you accountable. The relationship holds you accountable.
That's right. Yes.
So I'm a big fan of having someone to talk to about the market. And we've got a few products coming up. We're talking about this thing with Justin tonight, amazing chance. Jeff, I know how hard you tried when you first started and how long it took you. How would you like to have had a chance to spend 3 to 6 months trading with a guy who trades for $1 trillion fund?
I reckon all the money I wasted in the first 5 or 6 years would amount
isn't $5,000 or $10,000, is it?
No, way less than what is available here. That's for sure. And I would have gladly paid that today. Incredible opportunity.
Yeah, amazing what these guys get today. And I do hope that, and it doesn't mean that that's the opportunity. There's lots of opportunities, some stuff coming up. We've got some stuff coming up in the next 2 months, which is outstanding. And find your thing, become really good at it. Find someone to work with that you trust and you can speak to openly. Someone who just by the fact you're going to see them will keep you accountable. These are the little things.
I love it. It's not that any single trader is concrete in your world. Definitely not the case, because we each trade differently. And I got a funny feeling that 3 out of 4 traders won't suit most people, but that one person that actually just it just gels, doesn't it? And you get it. And if you get it, you've got a strong chance of winning.
And if I had Ainsley teach you how to trade gold and oil, Jeff, I reckon you'd be a disaster at it. And if I had you teach Ainsley how to trade the slingshot, I reckon she'd be a disaster at it.
Yeah.
Different people need different things. It's just the way the world works. And finding your thing is the key. And then becoming, as I say, how many years on the slingshot now, Jeff? How many years ago were we trading that together?
I think it's 7 or 8, maybe 8.
Yeah, I reckon you're right. That was a decent period of time.
Oh, that was good fun. Paul, this is not unlike that, I've got to say. The volatility is such now, it's waning a little bit now, but the volatility is such now that you do have the opportunity to get nice little intraday profits. It's there. It does exist, but certainly the bigger time frames are giving me more opportunity than those at the moment.
It's nice, isn't it? Because the bigger time frames are giving you more opportunity, and it's a safer place to trade. At the end of the day, it's just a good place to be.
I thought I'd be 75 before I'd say that. So to get it this early in my ancient history is okay.
Thanks, John TR. I'm pleased that you're enjoying it on YouTube and enjoying listening to it. Give it a like. Nice to see some guys giving it a like today, guys. Nice to see the show on YouTube growing in numbers every week. Mate, anything else from you before we start and wind it up and let these people get on with their Sunday?
Easter Sunday at that, yeah. No, I don't think so, mate. I only keep buying the dips on the Aussie pairs. You know, they're about to continue on. I think I've got no qualms about that. So that would be my tip going into the week. Wait for those nice retracements and keep on buying the Aussie.
Cheers, guys. Look, if you're in the room, I'm afraid we can't have you when you put your hands up. We're not doing any audio on this because it's going live to YouTube. If you have any questions, throw them in the questions box, throw them in the chat box, and we'll try and get to them. I know we didn't do the one on interest rate yields, curves, and inverting, but you did answer your own question in there. It is a sign of a recession coming. For those that are in the room, thanks for joining us. We love presenting to you guys. Thanks to the team that have come along and presented today. No Ash today. He's out shopping early in the morning in the UK, which is closed down. Didn't want to get caught in the crowds today. We've had Jeff with us, Ainsley with us, Julian with us. We've had a few in the YouTube room adding some comment as well. Thanks to you all. And most importantly, traders, thanks for coming along and listening. Try and take a couple of points out of every show that you can get some benefit out of. Find a buddy. Find something to become really, really good at. Stay out of chat rooms. They're a waste of time. That's my advice for the day. And guys, jump onto Google tonight and Google locusts. Now, all the attention in the world is on coronavirus, but just Google locusts. See what's coming, because next week we might be talking about locusts more than talking about coronavirus. And coronavirus story isn't finished. One country out of 210, which is coronavirus free, that's had a case. Only one has got free.
Where's the locust thing?
Africa, mate. They're coming into part of Asia. Yeah.
Kenya
about to be decimated to it. How will that impact coffee? How will that impact crops? How will that affect commodities? Because right now people can't go out and fight the locusts because they're locked in because of coronavirus. Have a read about that. We'll talk more about it next week. I promise you guys. Cheers. Look, guys, if you want to trade tomorrow, you're welcome to trade tomorrow. The UK and US shows from Jeff and Ash are going on because many markets are open. It's Easter Monday is a public holiday generally in the UK, New Zealand, Australia. It's not a public holiday in the US, Asia, etc. So shows and trading is okay tomorrow. Just remember that early morning through that UK Open session will be a bit light on volume. So we could expect to see a little bit of choppiness. So be a bit careful getting into the market early in the day. But you're welcome to trade tomorrow. Just trade well. Look, guys, just make good decisions. It's as simple as that. Try and keep the crap out of your brain and just focus on making good decisions. If you make good decisions, money comes your way. That's my experience of it. Cheers, guys, once again. Thanks for joining us today, and thanks to the team. See you guys.
Happy Easter.
Cheers for the positive comments, guys. See you later.